Hello everyone. Today we are going to analyze the situation with Bitcoin, and as usual there are both good news and bad news. But probably there will be fewer good news this time. The key piece of good news is that although Bitcoin has dropped by more than half from its all-time high, it is still holding the psychologically and technically important level of $60,000. You could say that it's holding not just the level but the entire 60 to 62,000 zone. And as for the bad news, for example, not so long ago, the American spot Bitcoin ETFs went through a record streak of 13 consecutive trading days of outflows, totaling around $4.5 billion. Then there was a symbolic inflow of about $3 million. But already on June 5th, outflows resumed, this time amounting to $350 million. In other words, the ETFs, which used to be one of the drivers of growth, are now, on the contrary, acting as one of the main factors putting pressure on the price of Bitcoin. In addition to the situation with Bitcoin ETFs, the macroeconomic environment is also contributing its own negativity. Inflation in the US remains high. Bond yields are putting pressure on risk assets, which include both cryptocurrencies and stocks. It's just that cryptocurrencies are even riskier assets than stocks. Currently, the yield on treasuries remains very high, and these are essentially risk-free investments guaranteed by the government. And investors have a logical question. What's the point of getting into cryptocurrencies or stocks which are at historical highs and could drop at any moment? Well, when I talk about historical highs, of course, I mean stocks, not cryptocurrencies. Cryptocurrencies are still very, very far from their all-time highs. In addition, investors are now actively looking towards AI, semiconductors, and major IPOs, the nearest of which I believe is tomorrow for SpaceX, which will be listed on the Nasdaq exchange. So clearly not in the direction of cryptocurrencies. That's why Bitcoin now has to compete for capital not only with the stock market as a whole, but also with the intense hype surrounding artificial intelligence. The psychological pressure from the company's strategy also plays a rather significant role. For years, it was a symbol of constant Bitcoin purchases. Recently, it showed that even such giants are not only capable of buying but also know how to sell. And for bullish sentiment, so to speak, this is not a very pleasant signal. Therefore, to be honest, the current situation for Bitcoin doesn't look very good. The fundamental background remains weak. ETF flows, or rather ETF outflows, are pushing prices down. Institutional demand is not aggressive at all, if it even exists right now. And yet, the price continues to hold the critically important level of $60,000. If Bitcoin fails to hold this level, there is a high chance we'll see it move much lower, down to the next psychological mark, which is $50,000. And today, we'll try to figure out what the chances are for Bitcoin to rebound to 60,000, and whether this rebound will be just a correction or actually the start of a serious rally, maybe even to new all-time highs. And what are the chances of breaking below $60,000 and moving significantly lower? Let's take a look at the chart. As usual, we'll start with the daily candles. And as usual, let me remind you what we had before. We had a global trend line, a downtrend drawn through these two highs, and at this point we broke through it, but in the end, as you can see, we came back below it. Accordingly, from a technical perspective, a retest somewhere in this area is likely in order to now test this descending trend line from below. Second point, if we look at the chart up close, we can see that we have a key daily candle close level from February 5th of this year, and that level is $62,909. We have been trading below this level almost the entire time. And now, once again, we are testing its strength. Accordingly, if we consolidate above this level, that's the first prerequisite for growth. But there is also a second important level, and this level, let's mark it more precisely. Let's turn on the magnet. This is the level of that large red candle from last Friday's drop. That is $63,885. This is the opening point of that candle. So if we engulf this candle, that is, if we close above this level, we automatically get a technical growth target somewhere around $67,000. That is up to the opening point of this candle. This is already the candle, I believe, from last Wednesday, June 3rd, right? Last week, Monday was the 1st, Tuesday was the 2nd, and so on. So the 3rd was Wednesday. That's it. That's why it's critically important to see Bitcoin close today above 62,909, and it's highly desirable for it to close above this red candle. Even though it's not crucial, it didn't set any new local or global lows, but nevertheless, this way we would absorb 2 days of decline, if you can put it that way. Well, because it was still a sideways movement. Now look, I'll show you something else. Here I have a big yellow line, a segment actually that I specifically prepared. First, let's look at what happened in 2024. I want to highlight two sections. For the first section, let's just turn off the magnet so it doesn't get in the way. Here there was a local high, and then above this local high there was some kind of consolidation zone. And now, using these 2 points, the highs and the lows, we'll draw this yellow segment. I'll just remove these little white pieces so they don't get in our way. I've simply marked the zone that we'll be using for all our constructions now. So look, we bring the green and yellow segments here, and here we have the highs and here the lows. What do we see? We see, first, a false breakout, second, another false breakout, and an attempt to approach this level. We break through, test from above, move far away, test from above again, and then go much, much higher. So this level, once marked in this area, we traded both below and above it for a long time and then tested it several times. It was a key level for the market, right? Accordingly, now we can also try to draw some kind of key level. Where is it located? It is located in the area of this consolidation zone. Here, our candles closed, here and here. Now let's grab this yellow segment again and pull it, well, just roughly somewhere around here. Where does it lead us? It leads us, look, well, I would maybe even move it a little higher, somewhere around here. It leads us exactly to the zone where this white trend line is being tested. That is to the area of $66,000. And this is quite a likely scenario. That's exactly why I'm not wearing an orange t-shirt today, because I allow for the possibility of growth. Moreover, the stock market, which has been declining quite dynamically in recent days, nevertheless, possibly based on the SpaceX IPO, has a chance for at least a local rebound. Again, this gives a chance for growth in the cryptocurrency market, especially since after such large drops, at the very least, a technical correction is simply to be expected, right? That's why right now I'm expecting Bitcoin to rise to around $66,000, to this yellow level area, to the area of the white trend line. Now let's turn everything off and look at the chart from the perspective of global candles or global trends. What do we see here? We see that in June, at this point, the growth from March and April has been absorbed. And if this trend continues until the end of the month, and if we break through the 50-month moving average, it will mean that we've fallen out of this range. That is, there was consolidation here, and by the close of the August 2024 candle, we marked the lowest candle close, which was $58,974. And so we have new technical targets emerging. The first technical target is the base of the February 2024 candle, which is $42,500. And note that this is close to the second technical target, the 100-month moving average, which is rising. And by the time we get there, which is quite likely, it could be right around 42,000. At the same time, the RSI is also pointing downward and indicates that, according to the monthly candles, the priority is for the decline to continue. Again, there are still about 20 days left until the end of the month, so it's too early to draw any conclusions. But I have outlined a potential scenario for you. If this candle is bought up and closes, for example, with a green body, and even engulfs the May candle, then the situation will fundamentally change, and we will be looking at levels like $89,000, then $108,000, and maybe even a new all-time high. But for now, that's not evident. Weekly candles. What do we see on the weekly candles? Bitcoin, take note, was trading above all the weekly moving averages, but at the same time it tested the 50-week moving average once, then a second time, then broke through all the averages, stopping its decline near the 200-week moving average, and now it has come right up close to it. A technical rebound is in principle possible to 2 levels, or I would even say 3. The first level is the midpoint of last week's candle, which is $68,000. Well, approximately, yes. The second level is the base of last week's candle, which is $74,000, maybe even with a breakout above last week's high and triggering short sellers' stop losses. And finally, the third level, which is also generally possible, is a move to retest the 100-week and 50-week moving averages in the area of $88,000. It's too early to talk about that for now. The weekly candles have given us the lowest close of the current year. Pay attention to the area below this zone, which was our lowest point in February of this year. This indicates a further move downward toward the $54,000 area, where firstly the 300-week moving average is located, and secondly where there is a trading range based on the lowest candle closes in September 2024 as well as in July 2024. So the weekly candles are indicating a continuation downward. The monthly candles are still indicating a decline, and therefore the current upward movement, which is suggested by the daily candles, somewhere into the area, as I mentioned, of 66, maybe even 68, or possibly even higher up to $74,000, should for now be viewed by us as a correction before the continuation of the downward movement. I think it's unlikely that we'll go to 68,000, because if we end up in that area, it would mean that the white trend line has been broken upwards again, and in that case, the movement wouldn't be limited to 68,000. We would head toward the upper boundary of the range that was formed back here again in 2024. Look at how many times it was tested. That's $72,000, right? But for now, we're talking about a priority somewhere around here. 66, maybe 68. That concludes the review. Subscribe to the channel, leave your comments on how you see the situation developing in the near future, at least for the next couple or 3 months. Well, I'll respond to the most interesting ones. Goodbye.